Good day, everybody. Behrus here, working with Toronto Real Estate Board. And in this video, I'm recording my last video of reviewing the stats of 2023, and that is for November of this year. In the November, we are still in an unaffordable range. Why? Because average prices are telling us that a family or a person should have close to $180,000 of free income to report to a bank or a lender to get a mortgage for a purchase price that's close to a $1.13 million in GTA, and that is based on a 20% down payment. Regardless of that, if the interest rates change, we naturally expect the prices to go higher, unless the interest rate change is an effect of an economic problem that we have, maybe an impact of a huge unemployment that we have. That's going to change the whole thing. I wanted to put that up front in the beginning of the video so you know what you're dealing with. And for the rest of the video, I'm going to delve into the stats for 3 or 4 different regions in the GTA and explain to you how affordability is taking shape, both in terms of the freehold market, condo market, and how we can take these two together to understand the market, and for you to not attend the webinars or seminars that are all across the town to get you into buying something, so you have the knowledge here. And then at the end, I'm going to delve into pre-construction, of how pre-construction of today, whether the impacts of the economy or the impacts of the supply and demand is going to take in shape of the future of the housing in the GTA. So let's start with the GTA in general. In GTA, as I explained in the beginning of the video, we are close to $1,130,000 on average prices only for this year. Only for this year, from the beginning of this year, we have a decrease of close to 6% in the prices. That means that volatility, the beginning of the year, that everyone was so excited that the market is not falling down and we have to go and buy. Well, do not overlook the shortage in the market, go buy because it's going to get more shortages coming in. It didn't happen, and the reality is that in the latter part of the year, we are close to 6% price drop since the beginning of the year. So if you're comparing this month to the month of January, we are close to 6% down. But that's not true if you're comparing this month of November, to month of November of last year, which is, we are slightly above the prices of last year, and that's close to 0.5% over last year. What's more important for you to know is that number of transactions, based on the reality that the economy is impacting the whole system of dynamic of the real estate market. Based on that effect, the number of transactions are as low as transactions that we have seen in 2000 year 2000, and that means that we are in a suppressed market. And that means that when we are in a suppressed market next year or year after or in the next while, we are going to see that suppression sinking in, and buyers are more and more leaning towards higher interest rates, the price of housing, and everything. And that goes along with the dynamic of the supply and demand. I'm not saying that the price is going to increase. What I'm saying is that the buyers are more influenced by the economy, and the economy is translated into the interest rates. So if higher interest rates sink in, and everybody realizes that the banks, General Bank of Canada, North American economy is more or less going to take shape the same way as it has been over the course of last 11 months, everybody understands that they can deal with it. They have to opt into certain prices for them to become a homeowner or invest in. So the calculation and everything is changing. That's why 2024 and the year after are going to be so interesting for people who understand the market and who can navigate the market so smartly that making money. Speaking about the transaction number, transaction volume, up until November of 30th of November, we are close to 62,000, and that is, as I said, is a very suppressed number when we are looking at the totality of the market. Days on the market have dropped significantly, close to 10% since the beginning of the year. Yes, in the beginning of the year, we had more inventory. And that was the time that so many people thought that, okay, more inventory, let's go buy it because more or less we're going to see the same thing, or the interest rates are going to drop significantly, which wasn't the case. And at that time, people went and bought, and now we have less number of homes available and lower days on the market in general. In some part of GTA, we are close to 40, 45 days. In certain parts, in general, we have close to 90 days. Before I get into the month of inventory, I wanted to explain to you, when I'm telling you to follow the trend, whether for the prices, days on the market, and try to corroborate these two to see which one comes first, at least to your mind. The reality is that these are very important numbers that everybody on the side of real estate transactions, which on daily basis do the transaction, is trying to make sense of before guiding you. So when you go to some of these webinars or seminars, they're starting based on this, let alone other factors that are staying in the market would stay neglected over the course of these webinars and seminars, which we have been to as well. These numbers are the major numbers that we have to take a look at. What's important is that over the course of November only, we have dropped by almost half a month of inventory. And that is significant for you. When we are advising certain clients that in your price range, you probably see that this is going to be the bottom of the market and not going to go that much lower, is based on this. Half a month of inventory was absorbed during the month of November. And that is significant in Toronto GTA, because Toronto GTA, the number of transactions are so high that a slight change would show itself in number of inventory in terms of the availability, and price pressure is putting back on when the inventory is shortened. It has shortened for the November, and you have to take a look at that. Closer to 4 months of inventory, a little bit less than 4 months of inventory for Toronto GTA and Mississauga and York region. However, Toronto is a different factor. By that, I'm going to segue into how we can understand different segments of the market in different neighborhoods and different towns. Toronto has been the most resilient market that we have had in the Toronto GTA. Reason being that there is a composition. There is a lot of property types to choose from. People with the low price ranges, with the high price ranges, they all can find something in Toronto. In Toronto, the level of inventory has stayed the same over the course of last month. However, the prices have been more resilient than the total GTA, but it's been resilient over the total GTA because the fluctuations are not that much. As I said, in Toronto, people have an option to go find a condo in the most expensive neighborhood where there is a house that they cannot afford. The same way, in other regions, they're still developing to the extent that the Toronto is right now. And for that reason, when you're looking at the condo market in Toronto, you won't see that much of a price drop. When you're looking at the housing market in Toronto, a freehold market in Toronto, you are seeing the more reliable number in Toronto as you're not seeing in other regions. In Toronto, the average prices are close to 1.1 million for the freehold, and the condo prices are close to 720. The condo prices are dropping because Toronto is seeing that volume of transaction that Toronto is seeing is much greater than other areas, and this number to me is more reliable than other numbers in other regions in the GTA. Comparing the Toronto to York region has almost 1/5 to 1/6 of a transaction volume in the condo sector, and the condo prices have dropped by close to 2%, that being close to $680,000 for a typical condo in York region. However, in the Toronto region is 720, and the number of transactions have been recorded as 825. In the previous video, I have explained to you how a region is taking a shape when you are looking at the prices. By that I mean that if you are looking at an affordability, a region that shows an affordability, an increase in the prices in certain pockets or in certain type of housing, like condos versus freeholds, is showing more of a reality of the market than a pocket or than a region that's not showing that. In the previous video, again, I referred to Mississauga. I refer you to the stats for the Mississauga to learn about that. In Mississauga, freeholds have dropped by 5% since the beginning of the year. Since last year, the prices have dropped by close to 3%. However, in the condo sector in Mississauga, we have increased in the prices by close to 8%. And that is showing you that affordability in the whole GTA is going to take more charge than anything else. By that, you can take one factor by saying that, so investing in condos is much greater, is going to return you much greater of value than investing in freeholds. The other side, the other thing is that the affordability is going to take shape, is going to take a greater shape in the freehold sector, because in a town like Mississauga, you are seeing that happening because people there are showing you clearly that the condo values of close to 650 is the bottom of the market. So when you're comparing the condo values in Mississauga to Toronto, you're going to see that the Toronto condo values are going to drop significantly lower over the course of next while to reach to that level of affordability, to reach to that level that people who are in line to buy condos can afford that. Because of availability of more condos, because of availability of new condos in all regions, whether York region, whether Mississauga or Toronto, you're going to see a much interesting dynamic in the condo market. By that, I'm going to go into the pre-construction. Pre-construction has seen a very sad year so far, and majority of the less sold projects are now being canceled. That might be a good news for condo owners of today when you're looking at the affordability, when you're looking at the price appreciation that we have seen so far. However, it's not a good news for the future of the region. It's not a good news because if you're canceling a project this year, you're not going to see that many projects happening, closing or closer to completion in the next 3 to 5 years. And that's going to put the pressure on the market. That provided that you are not going to see these projects being canceling today, being sold to another builder and being put on the market again next year. In this sector of the market, there is not much more resilient than you're seeing in the resale market. And that is only because the builders are now like us. The volume of investment is much greater than the resale market. It's risky for somebody to take over an overpriced land and build it than buying a lower priced land and wait until the market comes back and starts building. By that, I'm going to tell you that At the end of this video, I'm going to conclude that condos in different pockets, in different towns, in comparison to the freehold values of that town or of that pocket, are telling you that there is more opportunity, or are telling you that this is the time for you to sell that condo. Consulting with somebody who's on daily basis transact in real estate is of more value this year than has been at any year in the transaction histories of Toronto GTA. By that, I hope that you find this video and the details that I'm telling you in this video useful. Share that with your friend, family, and we're hoping to hear back from you if you have any questions or if you want to have consultation with us. This is the last video of this year. I'm gonna wish you all a very happy holiday, peaceful and full of health and joy. Have a wonderful day.